Hey guys, Tony here. Q4 earnings are in for GameStop and the earnings for the entire fiscal year. Surprising many people with the results, a double miss. In this video, I want to go through with you again how I've been trading GameStop, my thoughts on the earnings, and my outlook for the rest of the year. Let's get right into it. In this video, we're going to be going over the things that I liked in today's quarterly earnings result and in GameStop's results for the past year, and some of the problem areas that I continue to be concerned about. I hope that you use this video as just one more tool in the vast array of people providing coverage on GameStop with a variety of different opinions, a tool that you can use to get a different perspective than maybe you're hearing in other channels. This does not mean that any one person is right and someone else is wrong. It just means that there are different ways to analyze a play, and I hope to provide some value to you with my perspectives. GameStop has been in a long, slow decline over the last couple years as it returns to what the market considers a fair value relative to expected earnings. I said about 3 months ago that my target price for GameStop in 2024 is somewhere around $10 unless we hear something different from management. And once again, unfortunately, we did not hear anything today. My trading strategy for GameStop might not be yours, and that's fine. Everybody has their own trading strategies, but mine has been to search for lows just prior to an earnings announcement and then to sell just prior to the earnings. And I did that again this quarter, buying in the lows over the last month or so and selling today at $15.59 just before the market closed, locking in profits again this quarter. Now, I might decide at some point to be a long-term investor, long-term holder of GameStop, but not at this time, not based on current valuations, unless and until I hear something from management about a real strategic change in their business plan. If you are in my Discord or any of the people that I talk to on a daily basis about GameStop, you know that this has always been the plan, to pick up GameStop before earnings as cheap as we could and sell it just prior to earnings. We were not in any way expecting a major beat from GameStop for this quarter. And the final tip-off where we knew we had to get out before earnings release was the fact that once again, management did not schedule an earnings call. In my view, if management of any company is not scheduling a call to go over the earnings, to talk about what went great, to tell investors about future plans, then I take that as a bearish signal, and I knew that I needed to be out before market close today. Moving over to the dashboard that gives you a visual representation based on some common ratios that Wall Street is looking at of the risk of investing in GameStop. The good news is that some of these boxes flipped to green and some of the numbers inside of them improved. Profitability flipped to green with GameStop booking a 2 cent per share profit for the year. Earnings per share momentum, the second box here, also flipped to green with the 2 cents trailing 12 months EPS. The return on equity flipped from red to yellow. I'd like to see return on equity a little bit higher, but at least it's not negative now, so they get a yellow box for that. On the current ratio, the last box on the top row, the current ratio or working capital improved for GameStop. Moving to the bottom row on the left-hand side, the revenue growth rate continues to be a problem for GameStop. Negative 11% for the year. That is a red box. The short interest is the second red box on the bottom row. 22% or so short interest on GameStop. And if you see a short interest over 10%, that's going to be a red box. And when I see high short interest, I want to make sure that I'm really digging through the numbers and trying to get in the short's mind. What are they seeing that maybe I'm missing? Why are they so emboldened to short at such a high rate? And I think that if you can think about short interest like that, instead of thinking short interest is high, this is a definite short squeeze, think of it like a short would. What do they see that we might be missing? Moving into the actual results for Q4, net sales came in at $1.79 billion compared to $2.2 billion in the prior year's fourth quarter, and compared to analysts' expectations for the fourth quarter of $2.1 billion. That was about a $300 million miss. Net income was up though from a year ago. A year ago, fourth quarter net income was $48 million. They improved this quarter to $63 million. Unfortunately, this was also a miss compared to analysts' expectations, which were around $90 million for the quarter. Moving into the full year overview in green, net sales were $5.27 billion for fiscal year 2023 compared to $5.9 billion last year, giving us that 11% year-over-year revenue decline. Analysts had been expecting $5.6 billion for the year, so for the full year, this was another miss. Net income for the year, $6.7 million, compared to a net loss of $313 million last year. Beautiful work on GameStop's part in getting the company to its first profitable year in quite some time. This is definitely something that management should be proud of and that investors can be happy about. The only downside here is that with analysts' expectations for the full year revenue, they were expecting net income to be around $34 million for the year. And although $6.7 million is a positive, it did not meet expectations for the year, adding again to that downward pressure after the market close. Moving down to the balance sheet, cash and cash equivalents plus marketable securities came in at just under $1.2 billion for the year, compared to $1.4 billion a year ago. However, you will notice that accounts payable is significantly lower by about the same difference there, $200 million. A year ago, as the end of the year, GameStop had $531 million in accounts payable, and they have paid it down this year to $324 million. GameStop continues to maintain almost no debt on their balance sheet, just $17 million of long-term debt, and stockholders' equity for the year is slightly improved from last year at $1.33 billion. Overall, this is a very strong balance sheet, an enviable one, and positions GameStop well for whatever they have planned next. Now it's up to management to let us know what they are going to do. Moving into the sales mix table, we get into what I consider to be one of the problem areas for GameStop, and it's not worth focusing on what the mix is between hardware, software, and collectibles, because really the issue has to do with revenue. This is the real gut check time for GameStop investors thinking about what is going to change this decline in revenue every single year. We had last year in Q4, $2.2 billion net sales for the quarter. This year, $1.793 in Q4. Total net sales for the year declining from $5.9 billion to $5.27 billion. Now, as management obviously knew that revenues were declining, they have been working hard to reduce expenses. And we can see that SG&A declined from the year ending January 28, 2023, $1.68 billion to this fiscal year, SG&A just at $1.32 billion. Great work from GameStop at cutting costs. The concern that I have is that when your main focus is cutting costs, at some point there is some diminishing returns. GameStop did close its York County distribution center on March 15th of this year, just a week or two ago. And so perhaps we can see some further improvements from cost cutting related to the closure of that distribution center. Looking through the modeling spreadsheet that I put together, there are a couple things that I want to point out here. First of all, the 2024 and 2025 numbers. These were analyst predictions for this year and next year. These numbers will probably get revised based on the numbers that GameStop just posted. So that is something that I'm going to be keeping an eye on, any analyst revisions to future revenues and future earnings. When we look at the actual numbers for this year, $5.27 billion for the year, falling far below what the professional analysts had been expecting of $5.6 billion. When we look at the earnings off of those analyst forecasts, it was going to be 11 cents, giving us a trailing 12 months PE ratio of 117, which I thought was too high. And that would be part of my justification for saying that the price of GameStop is likely to come down. Now, though, we're dealing with an actual earnings per share of the year of 2 pennies. And although it is great to say GameStop made a profit, that is going to yield a trailing 12-month PE ratio of 597. And that obviously is also too high. I certainly can't say with absolute certainty what is going to happen with GameStop's price, but looking at a PE ratio of close to 600, I feel that it is very likely that the price is going to be driven down from here. Now, retail investors are going to be fighting back on that, but I want you to consider that Wall Street is going to be very emboldened to push the price down to a more reasonable valuation. And they're going to be further emboldened by the fact that the total revenue for the year was a bigger miss than people had been expecting. On the positive side, it's great to have a profitable year. It's great to have a fantastic balance sheet. GameStop investors need to be thinking about what is the company going to do to stem the bleeding on the revenues. Because no matter what else we're looking at, Wall Street is focusing on declining revenues. You could have a company that makes 2 cents per year, but that is not going to send this stock price skyrocketing, even with a great balance sheet. We've got to have a change in direction in the revenues. We have to have a strategic plan from Ryan Cohen and the board of directors of GameStop. For the moment, I'm going to be personally sitting GameStop out. If you're in the stock or you're a fan of the GameStop stock, I wish you much luck. I'm going to be waiting for a chance to maybe get a better entry over the coming weeks and months, and keeping a close eye on what management has to say going forward. If you have any questions or comments, please leave them below, and I will be continuing to do once per quarter coverage of GameStop as they announce their quarterly earnings, or if they have some good news announcement in between, then I will pop in and cover that for you. I am Tony Denaro. Thank you for watching, and I will see you on the next video.